Hello, good evening, ladies and gentlemen, traders and investors. Alex here from MarketWise Asia. I know today it is not a Monday evening. This is a Wednesday evening. Okay, so today's date it is the 4th of September 2024, a Wednesday evening. Okay, so the reason why I do this Facebook Live on a Wednesday instead of the usual Monday, okay, the reason is very simple. Okay, because my wife was away on Monday, so I have to take care of my daughter. So my girl is still pretty young. Okay, only 6 years old. So need somebody to take care when at night when my wife is not around. Okay, so that's the reason why. But I still want to do a live for you this week. So that's why I'm here today. Okay, so let me take a look at the comments right now. Okay, so I don't know how many will actually turn up because it's not my usual Monday, and I know that many people are very used to a Monday evening. So today is Wednesday evening. Okay, so let me take a look at the comments first. Dave, LK, W84, okay, William Pei Wen, Lele, Koi, okay. Thanks so much for watching this live stream. So if you can hear me, see me, okay, give me a hi, give me a like, share, whatever it is, okay, just engage with me, okay. I think there'll be more people streaming in, okay. Just say hi to me if you can see me, hear me loud and clear, okay. I will really appreciate that, and also allows Facebook and YouTube so-called algorithm to let other people know so they can broadcast this live stream to more people instead. Okay, hello, Jin Yo. Okay, Yu Yang, hey, good to see you. Yu Yang, I thought you are in the Philippines right now, or you're back already. Okay, Gilbert, Seok Yen, okay, Shah, okay, Hawk, Jerry, Mary, Willing. Thank you so much. Okay, all right. So give me a like, share, and comments. Okay, before I kickstart today's session. Okay. I think today's session will be pretty short. Okay, I think can cover within also less than an hour. Actually, my goal every week is to do in just 45 minutes. But somehow it tends just go to over 1 hour that kind. Okay, but anyway, today live stream you can see on your right hand side. Okay, it is proudly supported and sponsored by Philip CFD. Okay, all right. So before I kickstart today's session, right? Okay, as usual, first, disclaimer first. Whoever, oh, Yu Yang, thank you so much for tuning in from the Philippines. So the internet connection is still not too bad. All right, so before I share, as usual, a disclaimer first. Whatever I share today is just for education purpose, not a recommendation to tell you what to buy or what to sell. So please do your own due diligence. Okay, see Hadley, Pona, Wailam, Yoshiko, okay. Jeff, test. I can see your comments on Jeff Cole. All right. So as usual, these are my usual social media handles and channel. Please subscribe and follow if you could. If you're watching this on YouTube, please follow and subscribe to our YouTube channel as well. And before I kickstart, right, as I mentioned, right, as today, live stream is proudly supported by Philip. Okay, there is a promotion. Okay, something that's free for you to claim. Okay, hi Bernard. All right, this Philip CFD, claim your CFD welcome gift. Okay, hear me out first. This will be a very good gift and also a very quick one for you. So Philip CFD, all right, right now they have this promotion until 25th of December. Yes, until the end of the year on Christmas Day. You can claim your CFD gift, open a CFD account, okay, trade CFD and get up to US 400 worth of shares CFD right now. Okay, so very simple, all right. If you do not have a Philip CFD account, all right, you just need to open a Poems CFD account. Okay, no funding is needed, just open a CFD account, but this is only applicable to new account holder. You can get a free Palantir CFD. That is one share that's worth about $30 plus, right? As of now, okay, for Palantir. If you open a CFD account and if you trade, okay, 1.5 million in CFD contract value, just the contract value, okay, all right, not the margin required, it's worth, okay, 1.5 million, okay, you get a Taiwan Semiconductor TSM CFD, okay. For TSM, what is the price of TSM right now? Take a look. TSM, it is worth about $160 thereabout, right now, USD lah, okay. And for tier 3, if you manage to trade 4.5 million in CFD contract value, okay, you get a Microsoft CFD, okay, shares. That is worth about $400. That's the reason why you get up to $400 worth of shares CFD, okay. And you also eventually you also need to download the Poems 3 app also. So all the terms and condition, okay, it is at the screen here at the bottom. You can go and check it out yourself. I will just post the, oops, not this one. I will just post the promo link over here. If you're watching this on Facebook and YouTube, you should be able to see the link. If you can't, okay, you can just Google or just go through the link over there. Okay, but if you want to open the account, please use this link. Okay, I posted over here. Okay, bit.ly/MWA-Philip-CFD. So all you have to do is just head over to the open account page inside, which I give you the link already, right? You just go over there, right? You are headed straight to this open account. So if you're residing in Singapore and have a SingPass, then opening an account will be very fast, very swift, take less than about 10 minutes, okay? You can, by default, already selected for you already some of the things. So by default is a Cash Plus account, okay? Trading facility, have everything, multi-currency facility, okay? All right, and the main thing is the contract for different account, this CFD account. The rest, if you really want, you can just take it yourself. By default, I think it is good enough. And after that, right, just continue and you can open via a SingPass account. So I repeat, the offer is pretty attractive. If you do not have a Philip CFD account yet, okay, you only need to open an account, okay, and if you don't find anything, okay, at the end of December, you are able to get a Palantir CFD shares free share. Okay, so this is something for you to consider. Right? If you do not have it, you can try to open a CFD account. It is totally free. So once again, I'm going to post the link and the open account link, okay, in the comments below. Okay, to check it out yourself. All right, so with that, let me kickstart this session right now. So this is this week, the economic data. All right, so for this coming week, there are quite a few economic data that's coming out from the 4th of September. Oh, by the way, Monday. Monday was a US public holiday, Labor Day. So the market actually opened yesterday. And of course, when the market opened yesterday, the market had a very strong sell-off. Okay. So Wednesday, just now there was the jobs opening, lesser than expected. Okay, and the market was quite volatile. So what's the market right now? Let me take a look at the market right now. So right now it's positive, okay, and it's strongly positive right now, as in better than at the pre-market lah. Okay, I'll share with you why my views of the market, okay, and then this one, okay. So I think the key thing to note, it is actually on Friday, the unemployment rate, okay, and the non-farm employment. The unemployment rate, I think I already mentioned last Facebook Live or live stream. I say that one of the key things that I look is also the unemployment rate. Typically, when the unemployment rate starts to creep up higher, it tends to have a recession coming up. But of course, I won't go back to the charts again. This is not the main point, but you can go through last week live stream. It is both on the Facebook and also on the YouTube. It is there. Okay, but anyway, Wednesday, as in today, Thursday, Friday, there is this data, and of course, the media can use any of this data to justify why the market will move up or move down. But I think that's not the important thing. The important thing is that all these so-called economic data that could have an impact on the market. Okay, all right. So before I kickstart, okay, just to let you know, this is from the second half of September. It is usually weak, okay. Let me share with you the data right now, okay, before I go into the actual chart, okay. So this is what I usually share. So this is from the Carlson Research, once again from X, Twitter, the Ryan the Trick over there, okay. So typically, okay, early September, it is still okay. But late September, it is, he call it the banana peel, okay? You slide, okay? Step on it and you slide. So typically, the first half of September, okay, this is from 1950 to 2023. So this is inclusive of the election, non-election, post-election, all this stuff, basically from 1950, okay, to 2023. So first half, typically okay. It is second half that has more trouble. So this is one of the chart that Ryan the Trick share. And the other one that I'm going to share with you, okay, this is the second half of the September by percentage, the performance day by day. I know that the data is a bit small, but okay, you can just focus on the shaded area, this highlighted area, the black box over there. You can see that September, it is over here. Generally, you can see that, it is not so red, okay? It is mainly some green, a little bit of orange, some red, can see over there, right? Okay, and it is the second half of September. It tends to have more red. This is where he called the banana peel. Okay. All right. This is everything clear so far. Can or not? Can understand? Can see the chart clear so far based on historical data, based on historical seasonality. Clear? If clear, just type letter Y in the comments so that I can move on. Clear so far? Can So there are 130 plus people in the room right now. So yeah, so today's Facebook Live a little bit lower than usual because as I mentioned, right, most of the time people are used to Monday. Okay, thank you so much for the response. Okay. Okay, so I want to share with you my data that I have. Okay, this is within context of the seasonal data over there. I think already posted. Is it here? No. It is, yeah, this is the one that I am going to share with you. In fact, I actually posted this to the, not posted, I shared this during the weekly seasonal Vantage Insiders weekly update. So I don't mind to share with the public also right now, okay? Because at the end of the day, okay, this is just a guideline. You still need to wait for the price action with the correct stocks or the ETF to trade also. Okay, so this is the seasonal trend of S&P over 13, not years, election year cycles. This is based on the election year. So, this year is the election year. Okay, and you will realize that, okay, during the election year, okay, you realize that August, it is very strong. So this is actually what happened in August as well. So this year is election year, and based on the 13 election cycle, which is the past 48 years. I repeat, this is not 13 years. This is the past 13 cycle, which is about 48 years. Okay, so you can see that in August, the S&P, let's use the S&P futures. Can you see that in August, it was indeed really, really strong. Okay, after just the sell-off in early August, the market just rally all the way up. And I think a number during early August, I said, and do you remember I said that at the start when the market sell off, when the VIX crossed the 3 standard deviation, I said that it was a good time to buy. Okay, I told you guys, 不用怕，不要紧张 okay, 不用怕. I remember during the Market Insights Virtual Summit, okay, there was one lady who came to me. I actually forgot her name. I'm not sure whether you are tuning in right now. She said that her RM, I think from DBS, these are the RM that service the high net worth people, told her, okay, to sell. The market, there could be more sell off. There could be a crash or more correction to come. He encouraged her to sell everything. Okay. And the fact that, she actually heard my Facebook Live and told her, as in when she joined and told her not to worry, then she sort of calm down and don't panic and sell everything. Okay. Yeah, so I'm quite eventually in hindsight, I was correct in a way lah. Okay, market go up. Okay, yeah. So I'm glad that she didn't sell everything off lah, and go and listen to those relationship manager or those bankers. A lot of times I can tell you, those RM, those bankers, personal bankers, they don't really trade the market themselves. Okay, yes, okay, they might have a high salary, high commission, they are high income earners, okay, but they don't trade the market themselves. Okay, all right, they don't have skin in the game. I repeat, they can tell a lot of things, okay, but they don't have skin in the game, okay, all right. Anyway, yeah, this is not an important thing, okay. I'm glad that she didn't sell off, but eventually, okay, I need to tell that I was also wrong to a certain aspect because, okay, I was anticipating that price would have some correction before going higher, but the market really just go up all the way, okay. Can, all right. So this is proven to be true, but again, okay, this doesn't mean that the seasonality roadmap is going to be 100% spot on or 100% guaranteed that you'll be right. Okay, because, okay, you can see from June here, okay, based on the election year cycle, okay, for the past 50 years or 48 years, there about 50 years, okay, here say that June supposedly to be a weaker month based on election year, tends to, you know, go down lower, okay, but okay, in June this year, the market, it is just way too strong, and in June it just tends to go higher. Okay, in June it just tends to go higher. So I just want to make a point that it doesn't mean that this election year seasonality, you know, data is going to be spot on 100% all the way. Okay, just want you that it could be wrong, so you still need to watch the price action. Okay, so which means that this lead to here, this is the current juncture right now, the pink vertical line. You can see that based on the election year cycle for the past 50 years, September, like what Ryan the trick say, okay, tends to be okay. It's just that maybe right now at the start of the month there could be some weakness, but eventually, okay, the market might be quite okay, okay, until the mid or to second half of September, when this is where the banana peel start, like described as by Ryan the trick. Okay, clear so far? Clear or not? If clear, just type yes. Darius, okay, I will not answer the question right now. So let me go through the thing. So later you just remind me again when I come to the answer and question Q&A again. Okay, clear so far? Yes, can see or not? So again, this doesn't mean that the market will do exactly what historically it has done, but at least you can anticipate what could happen. Okay, all right. I should have actually looked at the chart. I forget to look back at the election data over there. Okay, yeah, because I was bearish at the August, but eventually it was proven right by the seasonal data. Okay, so yeah, this is why I'm saying that, you know, you need to be more mindful that maybe by the mid of September things could get a turn. Okay, but you know, right? So it seems that right now the market is doing this. Market is doing pretty well right now. Okay, all right. So yeah, so this is the second half is usually week plus the election cycle, which I've covered already. And yeah, the rate cut, okay, just to remind you guys again, okay, this coming September, okay, there should be a rate cut, okay. So this is the, I think left about 2 weeks, okay. Yeah, 14 days, 2 weeks, 14 calendar days. The next Fed meeting is on the 20, not 20, it's 18th of September. 18th of September. So the market is pricing in 100% rate cut. The Fed will 100% cut the rate, okay, by the next Fed meeting. It is just a matter of they want to cut, okay, 0.25% or 0.5%, which means a 25 basis point, okay, basis point, or a 50 basis point. So there's a, in a way, 50 to 50% chance, okay, that the market will cut 0.25, 50% chance the market will cut 5, okay. But again, what if the Fed don't cut. I know it seems like impossible, but just, I don't know, what if the Fed don't cut? Okay, all right. Just something for you to think about. Okay, then that will be a major news. But I don't think so, I don't think so, but okay, yeah, all right. Okay, yeah, so okay, so I think last Facebook Live I mentioned that, you know, what will happen when the recession comes. Okay, so typically when the NABE, okay, the neighbor lah, okay, I call it the NABE announced there's a recession, the market tends to have a correction, but the market will well recovered, okay, before the official end of the recession, when they announce that the recession has ended. Okay, so I mentioned that. Also, I won't go through that. I won't go through that again. So it was mentioned here. Okay, under the market performance during recession, you can just read through that again over there. But what I'm going to share today, it is the what the past Fed rate cycles can tell us. There are a few sources that I can go back to retrieve some insights and data. The number one thing is from Schwab. Schwab is another broker from US. Okay, so the Schwab. Okay, so what the past Fed cycle can tell us. Blah 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 blah. Okay, all this data you can read it yourself. I think not that important. You can go through the data. Okay, so what happened when the Fed start to lower interest rate? Okay, it's a question we often get, but unfortunately, one does not have a simple answer. Okay, 有答好过没有答这样对不对 ？Okay, but anyway, okay, all right. So there are some patterns. Okay, when the Fed start to reduce the interest rate. Okay, you can see that. Okay, where is it? Okay, 86% of the time, the S&P have posted a positive return 12 months after the initial rate cut. So initially at the start, when the Fed reduced the interest rate, okay, the market tends to go higher. But eventually, okay, based on historical data, historically, okay, the market will start to come down, okay, whether it's a crash or a correction. But we can safely say that within the next 3 months, 6 months, the market tends to go higher. Okay. All right. You can see that of the past 14 rate cycles since 1929, 12 of them saw a positive S&P return for the past 12 months. So you can see that, you know, only 2001 and 2007 where the global financial crisis and the dot-com crisis, where, you know, when the Fed start to reduce the interest rate, then the market start to crash after that within the first 1 year. But you can see that in modern history, since 1974, that kind of rate, typically the market continue to go higher. But of course, you know, based on the so-called so what I don't know what's the effect, what's the bias, the memory bias or what. Okay, I forget the actual term. Okay, you tend to always remember the nearest things that happen to us. Okay, but all in all, when the Fed start to increase the interest rate, at the start, typically it tends to go a little bit higher first. So when the Fed start to reduce the interest rate, maybe next month, okay, this month, okay, don't be afraid that, you know, the market might start to crash immediately. No, it won't now. It will take some time. There's some lag time. Okay, all right. So this is what the data is telling us. Okay, another one that I'm going to share with you guys is actually these are from Visual Capitalist. Okay, again, pretty similar. Okay, what the past interest rate cut. Okay. So it is over here, okay, from Visual Capitalist. Okay, looking back at the past rate cut, I posted the link in the comments already. Okay, so it says there's always a delay when the Fed raise interest rate and when the economy, okay, feels the effect. Okay, all right, and again, you can see that, you know, at the start of the year, this was posted at the start of 2024 in end of January. Okay, you can see that a lot of these experts they think that the Fed will start to reduce the interest rate in March, in May, okay, in June, okay, in July. None of these financial institution, the bank got it correct. So we are way past July already. So in fact, we are way past June. So the Fed still hasn't cut the interest rate yet. So it's until July. So it doesn't mean that all these banks, okay, will know more than us. They might not have that insights that you, okay, they might not know as much as you think so too, okay? All right. And a lot of times, that I mentioned earlier, right, those RM, those bankers might not know as much as you too. Okay, they do not have skin in the game. Okay, all right. Hawk say what? In hell be hell. Okay, in hell be hell. A hell be hell one. Okay, all right. So you can see that this forecast. Okay, will cut. Okay, looking back, nothing much. Okay, it is just eventually it's just telling you that okay, when the recession occurs around when the rates are cut, there is a usually delay effect. Okay, yeah. So there's usually a delay effect, but there's a lag time to be 6 months or 1 year later. So we don't know. We don't know. But typically, when the Fed want to cut the interest rate, means okay behind the scene they have some data. Okay, telling them that the economy is slowing down. Okay, so they want to cut the rate to boost the economy. If you think about it, if they think that the economy is still going strong, okay, why should they cut the interest rate? They could just might as well just hold on to the interest rate, correct or not? Okay, why cut? Because behind the scene there's some data doing that economy is not doing well. And one of the things that I mentioned is actually the unemployment rate, which I tell you, unemployment rate, okay, it is slowly creeping up, which might not bode well so much for the economy as well. Okay, clear so far? Clear? All right. So yeah. So let's head back to the chart right now. So you can see right now the S&P 500. Okay, let me load something first. Okay, so the S&P 500. Okay, you can see that initially the market was actually starting off, but right now the index is actually turning higher. It's actually turning higher. Okay, and one of the thing, okay, I don't know whether it is actually Jim Cramer. Okay, here is Jim Cramer. It is here. Jim Cramer. I think he jinxed the market. This one. Okay, can you see over there? Jim Cramer, the last dip was brutal and harbinger for more selling. Okay, your screen is black, Noah. Jen, it is looking fine. Everything is clear, right? Everything is good so far. You guys can see my screen. If you can see, just type okay in the comments. Okay, all right. Can see my screen, right? The X Twitter. Okay. So it's like the inverse indicator was here again. Jim Cramer said the last dip was down on yesterday, nothing less than a day ago. The last dip was down and harbinger for more selling. So this is like the inverse indicator once again for Jim Cramer. So when he said that there might be more selling to come, okay, the market actually starting to reverse, okay. And the reason why, okay, nothing secretive in a way. So there is a few reasons why I think the market, like after a strong 1 day sell off, the market start to go higher again. So of course, one of the reasons that I mentioned, okay, is the seasonal data based on historically, okay, early of the month is maybe a bit weaker, but eventually based on election cycle, price tends to go higher maybe until the mid of September. Okay, so this is one reason. Another reason, okay, it is that, do you guys know that this month, September, it is the start of a new month. So when there is a start of a new month, there is a new what? CP Yintun, CP Wantan. There's a new CPR, right? There's a new CP central pivot range, right? So every month, okay, new month, there's a new CPR, okay, new CPR. So this month, it is the same CPR. So if you take a look at the NASDAQ, okay, this month CPR, it is here, okay, CPR is here, okay, because we are just at the start, okay, the start. So you can't really see the dot, okay. I zoom in, you guys can see the dot is just here. So the CPR, the pivot point, it is actually here, okay, here. So you can see that the market, it is right at the central pivot range. sell off right into the pivot point, and right now the market seems to be supported by the pivot point area. And once again, this is the RTY, this is the Russell 2000. Once again, there is a new central pivot range in September. We are right at the CPR here, okay? Once again, market sell off right into the support, right into pivot, okay? So not surprisingly, if the market have a rebound right now, of course, whether the market can rebound, okay, nobody knows. It's not I can answer you right now, okay? According to your chart after me, again, we don't know, but this is based on the seasonal data that we have, okay? Okay, so this based on seasonal data, again, it works accurately for August, but it didn't really work for the June. So whether this will work or not, we don't know, but we can actually prepare ourselves. But all in all, okay, I just want to be transparent with you, okay? For the past 1 to 2 weeks, not the easiest to trade equities. When I thought that it is going to come down, it went up. When I thought that it's going to go up, okay, it go down instead. Not the easiest. But other asset class, it is doing pretty well. Like I mentioned, okay, for example, like the gold previously, I think just before 1 to 2 weeks ago, I started to mention about gold already. I said it is like peaking at the top, might have some sell off. Okay, I'm not sure whether any of you caught that. For the seasonal advantage, I actually mentioned that quite for a while, 1 to 2 weeks ago. Of course, it's only yesterday when it really started to go down for the gold. Okay, so let me take a look at the let me take a look at the zero gamma level first. Let me take a look first. Okay, you just hold on for a while. Let me take a quick check. I forget to check the data just now. Okay. Okay, so for the zero gamma S&P 500 cash index, it is about 5595. It's about 5560. So right now we are just right below the gamma level, zero gamma level. Okay, if price can go higher, okay, then of course it'll be better. But I'm not too sure whether this will be acting as a resistance, okay, in the coming days, because right now this is the upper range of the central pivot range. So it's a bit, to be honest, it is a bit difficult to trade the index. It is a bit difficult to trade the index. So not easy, but my anticipation is that there could be a possibility that the market, come down, rebounded back up a little bit, okay, then started to come down again, trapping people to buy again and then come down. Maybe I don't know up for how many days, but it could be, okay. So that's what I am anticipating. But of course, I could be wrong. Once again, I always humbled by the market sometimes, okay. When you're too confident, I always get humbled by the market. So I could be wrong. The market can continue to go higher. I don't know. I seriously don't know, okay. So once again, just to be anticipate the market could just do like that, okay, based on the seasonal data. Everything clear so far or not? Clear so far? If clear, just type okay in the comments. Okay, but nevertheless, okay, I just want to share with you with that. Okay, this is previously the seasonal advantage insiders, I did a webinar. Okay, so previously, okay, I just want to do some case study with you guys now. So previously I mentioned about the gold miners and all this. I think 1 or 2 weeks ago I started to mention already. So the good news is that I traded gold. I think last week, right, I mentioned that I sell the vertical call options. Like, I'm not sure how many of you can remember, okay, vertical call options. I sold, okay. So this is actually from the seasonal advantage insiders group, okay. So I can take a look at this case study over there, okay. Over here, where is it? Member success, okay. Yeah, so I traded the gold previously. So there are a few members traded the gold as well, like John, okay. You can see that, great share by Alex. I took profit on the GDX just now, okay. He posted yesterday lah. And then by SS, okay, also he traded gold miners, GDX, also covered back at a good price. So for me personally, I traded the gold futures options lah. So this is gold. So previously, there were a few, like Hologics, I also managed to exit. In fact, SS just now he mentioned to me, okay, he also shorted Hologics. So these are some of the profitable ones. So, but again, I want to be transparent. A few of the stocks that I traded for this week, shorted one, doesn't work well because my stop was actually pretty tight, so I get exited. But after that, price reverse back up again. Okay, all right. Okay, so just to want you know, if you wanted to watch the webinar again, right, you can go watch it over here. Okay, it is until the 7th of September. I know there are quite a number of you guys who joined the seasonal advantage insiders during the latest webinar. So once again, just to share with you the members area just this week. Okay, just this week. Okay, all right. I mentioned that, okay, where is it? Okay, that this week, no standout trigger that met my criteria, okay? But I actually did mention, okay, the bearish ETF opportunity, okay, the GDX Gold and GDXJ, okay? Historically bearish during September. So you can see that for the gold, okay, even though right now it is positive, okay, but previously, okay, there was some downside to go there. If you're doing some swing trade, there should have some profit for you. And GDX, this is the gold miner, like what John mentioned, okay, yeah, it went down quite a bit, so there was quite a profit for them as well. Another thing I realized, I think I mentioned before, I realized, not always, I realized that, okay, gold miners, okay, typically, again, not 100%, typically tends to lead gold, okay? The gold miners will tend to drop first, okay? All right. Next time to wait when see as exited. So okay, SS members of the just posted, okay, he also shorted Hologics, so there's a profit made for him as well. Okay, so GDX, it tends to lead the actual goal itself. Again, I repeat, I need to keep repeating myself. Not always, but a lot of time I find that it tends to lead gold itself. So once again, I don't know whether there is more downside to gold, but historical September there is some downside. But again, if you want to short now, okay, you could lah, but okay, might be a little bit late, okay, all right, because yesterday dropped quite a bit already, okay. If you understand what I'm trying to say, just type GDX in the comments, okay. Also want to share with you guys, not only that, earlier in the August, there was some good trade as well. I just want to share with you. Okay, not this one. This one it is. Okay, I just want to share with you over there. There was some case study, the latest case study over there. Okay, for those who actually missed that. Only recently, also in August. Okay. For example, there were long calls. Okay, not options as in my call for the trade, okay, 5th August to 21st August, okay, the SYY, this is I think in the food industry, okay, I said that at that point in time when I first mentioned, it was somewhere around there, okay, I said that 90% of the time it tends to go higher. So one of the call I mentioned was SYY, so eventually it go higher as well. This was what I mentioned during the webinar, okay. And then for Nasdaq, I think all of you should be familiar. This is the Nasdaq stock, not the index, the Nasdaq stock itself. Nasdaq is also trading, okay, in the exchange, okay, Nasdaq. So when I first mentioned 6th August to 26th of August, 10 years, 90% bullish during this favorable period. When I first mentioned, it was somewhere around here. After that, price eventually go higher and such, okay. And then there were a few, like for example, previously August also oil, okay. When it was mentioned, it was here. Of course, by now you guys should know in August there was a sell-off in the oil. In fact, right now, oil is also selling off right now. Okay, oil is also selling off right now. But okay, I want to give you guys some hints. Okay, I think okay, we are maybe we are somewhere near the low for oil. Okay, we are somewhere near the low for oil. okay, based on seasonality, okay, historical data, again, not 100% correct, okay, somewhere around September, mid-September onward, okay, I forget the actual day, I need to look back at the data, yeah, I also forget the data, I need to look back to my own data, okay, okay, it tends to go higher, how high it can go, I don't know lah, okay, but I think maybe, okay, the low might be near, okay, the low might be near, okay, good, okay, this gives me more conviction because I was waiting for it to hit the low over here, and it did. So it actually, it actually went beyond the low in June. So it hunted the low in June. So those who put their stop here might get stopped out, and there's a lot of liquidity over there. Okay, so again, don't quote me. I need to check my data, so I forgot. Okay, I'm looking for oil to rebound in the week or in the months to come. Clear so far? I don't have the exact date with me right now, but I think somewhere around, no. This is not pin bar, okay, when this is not pin bar, this is more like doji lah. But again, not important, okay? It is not, the pin bar, I would prefer it to be like that, okay? But it is actually like that. So it is still quite okay. It's like a zong zi, okay? It's like a zong, okay? So equally high low, okay? In fact, the low is actually, the shadow is lower than the high. So not exactly pin bar lah, okay? People will treat it as a pin bar, but more like a doji, okay? Clear so far? So if you understand my view on gold, okay, type oil in the comments. So we shall see, okay, in the 1 week, 2 weeks, 3 weeks in terms to come. So if you know what you are doing, there are a few ways, okay, to trade gold, not to trade oil. Of course, you can wait for a signal to buy oil, oil directly, be it futures, be it CFD, be it the oil ETF. There are a few ways. Another way that you can do, okay, if you are knowledgeable in options, okay, you could actually perhaps, I say perhaps, not 100% sure, you could perhaps sell a vertical put options on oil. For me personally, I might do that. I would sell a vertical put options on oil futures. Okay, not oil ETF, oil futures. I repeat, there's a difference. Trading oil ETF and trading oil futures options is different. Okay, so that's one way. Another trade ideas that I wanted to share with you guys. I think I should sharing too much really. Okay, but I think it's fine. Okay, because I never reviewed the date also. So this is the seasonal bearish. Okay, I just want to reiterate. Okay, this is the bearish data for August. So I know there's some crossover, but never mind. Okay, I just want to let you know, okay, for August, when I first mentioned to my data, my insider side, you can, for example, can search for in August, type gold. You'll see that gold, it is here already, gold, okay, gold is here. If you type GDX, whether GDX is here or not. Okay, GDX is here, okay, gold minus, it is in not early, mid-August onward, mid-August, 12 August to 1st October. Okay, you get the idea. Okay, all right. So, okay, when I first mentioned, okay, gold, it was about here. So price just continue to go higher. Price just continue to go higher. So, as I mentioned, we still need to wait for the price action. So price continue to go higher, then we do nothing lah. But eventually, okay, I see that maybe price looks stuck here, and looking at the forward seasonality data, looks like a good trade. So eventually, for me personally, I sold a vertical call options on the gold futures options as well. So this is how you can make use of the data as well. So this one I want to share with you. Okay, so the current latest one, okay, is September. Okay, but I did not share the exact date to be fair to my seasonal vantage insiders. Okay, what I want to share with you, okay, is take a look first. Okay, take a look first. Okay, just check out the first few. What do you see? Okay, let me just try to zoom in. Just zoom in. Okay, what can you see? What can you see at the start? What kind of asset classes can you see? Can you see at the start? Let me know. Let me show me. Let me know. Bond. Bond is for German. Bond. Healthcare one I can see, yeah, Navin. But generally, okay, you can see is that bonds, especially, you know, bonds, okay, like this is the Vanguard long-term treasury ETF is similar to TLT lah, but this is under Vanguard lah. Bonds, okay, okay. So seasonally, at this point in time in September, bonds historically is not strong, okay. So if you take a look at bonds right now, okay, bonds right now it is still at a high over there, okay, it's still at a high over here. All right. So I know, okay, I know the market, the Fed is going to reduce the interest rate. Okay, so when they reduce the interest rate, okay, by right, the bond price should go higher. Okay, that's why I'm asking. I don't know, is the market knowing something that we don't know? What if, okay, the bonds, you know, I don't know how long it lasts, the bonds start to come down, okay, which means that, you know, the interest rate might not stay there. I don't know, okay, sometimes it might not move in tandem, okay. It is just like a lot of people are waiting for this, like, this thing, okay, to go another leg up higher. Okay, again, what if it doesn't go higher? What if it doesn't go higher? Okay, what if it doesn't go higher? So that, you know, there is an impulse move in TLT. I remove the vertical line, which is like causing a lot of distraction. Okay, okay, this is the TLT long-term bonds. Okay, so people are looking at that. Okay, like looking for a breakout like that, a breakout. Now it's actually a breakout already. Now it's actually a breakout already. Now it's actually, oops. Now it's actually, okay, now it's actually, in a way, it's a breakout, okay? And now, okay, what if the breakout cannot sustain? It is just like the gold over, not gold, is it gold? Yeah, something like, you know, consolidation, you know, what if the breakout cannot sustain, that kind of thing, okay? All right, so for TLT is like this, okay? Not the easiest to trade because I'm also very affected by the macro. So technically, by right, okay, bonds should continue to go higher because, you know, we know the Fed is going to reduce the interest rate. When they reduce the interest rate, okay, the bond price has to go up higher one. The bond price has to go up higher one. But the price action and the historical data is telling me what if the bond price cannot go higher. Okay, so I'm looking for, maybe I will see how if tomorrow or the next few days or next week, if price cannot sustain, maybe there's a wash and rinse pattern and such. Okay, I might, again, I say I might, don't copy me, I could be wrong, I could be totally 100% wrong. Okay, I might sell vertical call options, okay, on the bonds future. Okay, again, you might ask me sometimes, you know, why I trade futures options. Okay, the reason is actually very simple. Okay, it is because I can sell maybe pretty far out of the money, right? I still can get decent premium. If you trade the stocks or the ETF, you need to sell very near to the strike price, then you can get enough premium or enough meat. If you sell too far away, you cannot get a decent premium, very little premium. Okay, not worth the risk, Okay, same people asking, when we trade option of it, we face higher leverage. So again, all this you can use a spread. So when you use a spread, okay, all the losses are capped. Okay, yeah. So when you trade futures options, okay, the margin required is, I think, it's a bit higher. Okay, And yeah, leverage risk not so much. Yes, in a way, yes, because the margin will fluctuate, okay. But all in all, the margin is a little bit higher, but you definitely need to do a spread. Okay, don't sell a naked call, whether be on stock ETF or futures options. Okay, you need a spread. Okay, can. All right, any question so far? So this is one that I have shared with you already. Okay, so for oil and the ETF. Okay, all right, so I'm looking at ETF. And by the way, I really just want to share with you. In fact, I wanted to thank SS as well. Okay, just now I just want to make sure that I didn't share the wrong one. Okay, in fact, he actually won a capital voucher lah. So okay, this is actually a very good testimonial. Okay, so he said that can I make a suggestion? Okay, I think SS, by the way, SS is SVI seasonal punch insiders I think your ETF coverage is really good. Okay, think can cover more of it. Okay, besides equity spread sometimes can be scary. Okay, the ETF seasonality is really wonderful. Yes, sometimes I feel that ETF can give me a very broad view of what the market it is doing. So this is what actually for the seasonal vantage insiders, I do provide the ETF for the bearish ETF and the bullish ETF side as well. So give you a broad view on what is actually happening. Okay, and just to let you know, in case you haven't watched the webinar for the seasonality, the seasonal trend. Okay, just want to let you know, the June to September data is already okay. I think by mid-September or towards the end of September, then the fourth quarter will be ready. Okay, but as of now, okay, I have a coupon code for you guys. Okay, SVI 499. Okay, the usual price is 596. Okay, all right. Compared to the usual price, there's a 17% off. It's a $1.39 per day, and this is the first time. Okay, I'm giving a 30-day money back guarantee. So in any case you don't like it, okay, I'll give you your money back, no question asked. Okay, just one profitable trade will cover the annual fee. So valid until the 7th of September, a few more days lah. So essentially, I'm giving you this. Okay, so blah blah. You can watch the webinar yourself. So in case you don't know, okay, this is the webinar. All right, you can do your own time, but watch it before the 7th of September. The coupon code will expire on the 7th of September. So this is eventually what you will get. Okay. Yeah. All right. So I'm providing you the data. So the main thing you are buying from me is actually the data. Of course, every single week I will provide the weekly video updates, and I also give you the bonus. Okay, I'll give you the bonus, the bearish seasonal data, bonus 2, the trading masterclass video, bonus 3, okay, the position sizing, SL and KP indicator, bonus 4. There'll be live webinar and in-person gathering. Most likely, I will do the live webinar most likely in the 3rd week of September or the last week of September. So I'll do a live webinar really soon for the insiders, and then there'll be priority email support. And I will also give you the Traders Blueprint ebook. This is the physical book, but I'll give you the digital book. So this is worth $29. As I mentioned, right? Okay, everything okay is just 99. All right, can use the coupon code SVI49. Go to seasonalvantage.com. All right, yeah, forget to post it. So anyway, as I mentioned, right, your investment is fully protected. This is the first time I'm offering that. Okay, there's a full 30 days money back guarantee. So if any reason you think that it is not a good fit, you think that I've not provided you any value, the data is absolutely rubbish to you, no use to you, my weekly insights update is useless to you, okay, simply contact me and I'll give you a refund. Okay, so totally have no risk. Okay, and you can keep the ebook for free. I'll give for free also. All right, so this is how much I believe the SBI can do for you. Okay, so once again, I want to tell you, okay, transparency. Okay, this 1 to 2 weeks, okay, a bit challenging, but I need to tell you also for the past many weeks, okay, we have been profitable. So there'll be some drawdown, but I think that is fine as long as your reward to risk ratio, okay, it is more than 1.2R, okay, preferably 1.5R, all right, which means that let's say you don't know, never mind, okay, just let you know your profit is more than your losses. Okay, for example, if you risk 1K, your profit is 1.5K. Like that's what I meant by 1.5R. You can lose, okay, 50% of the time you are still profitable, which means that maybe out of 10 trade, okay, you lost 5 trade. At the end of the day, you are still profitable. You can trade 20 trade, you lose half 10 trade. At the end of the day, your reward to risk ratio is more than 1.2 to 1.5, okay, you are still profitable. Okay, but we definitely, the win rate is more than 50%. Okay, that's more than that one. Okay, so we are still profitable at the end of the day. But so as I say, okay, sometimes when the market is not so, equity is not so easy to trade, okay, we can trade other things. Like for example, recently the gold trade that I do. So I didn't really trade equities, okay? Yeah, or there might be some losses, but I think that's fine. But you can trade other asset classes, and this is where the ETF data will provide you. Okay, so is the trading masterclass useful for beginners who is not familiar with trade? Okay, if you are totally, absolutely know nothing about trading, okay, nothing, okay, I suggest you don't take my seasonality data. I presume that you have, because I don't want to promise you that, well, you learn anything, okay? I don't I don't want to over promise you, but yeah, you need to have some basic knowledge of trading. You know how to buy, sell. You know how to big ask. You know some simple indicator, but you do need to know a lot of things. Okay, but you need to at least traded before. You need to have at least traded before. You're totally new to trading. Okay, you are, for example, investor. You are totally new to, then don't take it. I don't need your money. I repeat, I don't need your money. Don't take it. But if you have some trading experience, yes, you can take it. Okay, you can take it. Okay, inside the members area, right, there is this masterclass. I will share with you, okay, how I actually, okay, use the watch and rinse trigger to enter, okay, how to set up the cloud pivot point, okay, how to set the stop loss and take profit level, where I'll show you how to use the indicator and such. And the webinar itself, okay, I will cover a lot of things. So for those who will just join, I think quite a number of you just join, remember to watch the 2 webinars. You'll cover a lot of things. You'll cover a lot of things, okay, that you don't understand. Okay, and of course, this coming end of September, I will also do a live webinar itself. Okay, yeah. So all in all, I think there's a lot of web value lah. Yeah. Okay, so you can use the coupon code. Okay. All right. So in case you don't know, this is the seasonalvantage.com. All right. It's just a very quick one. Okay. You can go to here, key in the coupon code. All right. SVI499. Create your email address, password. Okay. Apply, and you are good to go. All right. So there's a 30 days money back guarantee. So there's no risk. Okay. Can? Any question? Yeah, any question before I end the session? I think there's some question from you, right? Any question, Darius? If you are still there. Which stocks are high now? RSP is increasing yet, or which stocks? RSP is increasing. Okay, so if you wanted to know right now, okay, let me just go through RSP. So the RSP. So which means that the smaller cap, it is doing, not small cap, the mid cap to small cap tends to be doing quite well. Okay, so in case you want to know what is doing well, all right, you can actually go to the stock chart, what industry, what sectors is doing well. Before you can go to the individual stocks, the broader base is the sector industry. So you can take a look at the industry summary table view. Okay, so you can see, okay, automobiles all these are doing well, retailers are doing well. Okay, tobacco, household product, all these are doing well. Let me go through some example with that. Okay, so like STR report, okay, from the industry, okay, for the past 1 week. Change. All right, so these are the household product. Oops, I cannot, somehow this thing cannot get off. I don't know why. We load again. Intraday, end of 1 week. Okay, change. So this is telling me which set. How come this one keep coming up? Okay, I repeat again. Sorry. Okay, let me try to do this 1 week. Change. Large. Sorry, this is a large cap stock. Let's go to the industry. 1 week. Aha, you can see over there. Consumer finance, non-durable household product, all these are running strong for the past 1 week. So if you want to take a look at the non-durable household product, okay, oh, this is not showing the stock. Okay, you can go to, for example, like let's go to mid cap stocks. Change. Okay, some of this company, right, you can go through yourself. I don't go through now. Okay, mid cap are doing pretty well. All right. Okay, like I don't know, Box lah, PAC some stocks I don't know as well, but all the mid cap stocks. Okay, let's maybe Box. Maybe some of you guys know. Okay, let's just go through financial property. I know it's pretty strong. I think TSG. Just randomly choose TSG. You see? So all these are the strong one, even though it is coming down. All these are the strong one. All right. So these are how you can find the stronger stocks in the mid cap or small cap. You can use stock charts to help you. All right. Can? Okay. How do I short the market? Actually, very simple. Okay. Are you new to MarketWise Asia or me? Actually, you can use the CFD to short. For example, for the past events, you can use their brokers, CFD provider, okay, that sponsor event before. You can use IG, you can use a plus 500, okay. You can even use the other standard broker, US broker. Like for me personally, I also use IBKR, Interactive Brokers as well, okay. Tasty Trade for US options as well, okay. Yeah, you personally, you can use CFD. Of course, you can also use Philips CFD to short as well. And right now, okay, I forgot to mention again. So this event is sponsored by Philips CFD. So right now, LW, this is good for you. You can open a CFD, okay, account and try to test out the platform. And right now, they have a free welcome gift. So as I mentioned over there, okay, as long as you open account, okay, you can actually get a free Palantir CFD as well. Yeah. Okay, just a recap. Right now, Philips CFD have an offer. You just have to open an account for those new account opening. Okay, no funding is needed. You can just test out profile, test out the account. All right, and you can get a Palantir CFD by the end of the promotion period. That's end of December. If you manage to trade 1.5 mil in CFD value, you get a TSM CFD shares, blah blah blah. Tier 3, you get a Microsoft. So all in all, you can head over there, right, and view the terms and conditions. But all in all, you just need to head over to this link, okay, and then open a CFD account and test it out, and you can try it out. Okay, of course, whether you want to really use pure poems to short the market, it is entirely up to you. But I'm telling you the options. Poem CFD is one of them. Previously, we have IG, we have Plus, all these are reputable and MAS regulated CFD provider. So all head to the account, all right, and then by default it's automatically checked already under CFD. Make sure it's check, okay, and then open via SingPass, and you are good to go. If the Fed already cut on 18 September, do you think the market will still respond according to the? I don't know. Okay, I don't know. So from right now until 18 Feb, okay, there are still some days to go. So within this period, okay, the bonds market can still go down. The bond price can still go down, and if it can go down, I'm very happy to take profit. I just need that short window of like 2 weeks period to make the trade. Okay, maybe by then when the Fed announced the market, announced the interest rate, I might already exited the market already. Okay, yeah. So typically I do a shorter term swing trade. Yeah. So I think within from right now to 18th of September, okay, there is still time for us to do a shorter term swing trade perspective. Okay. So for those who haven't opened a CFD account, you can feel free, okay, to see the promotion from Philip and open an account from Philip. Any questions so far? Any questions so far? Okay. Just to let you guys know again, okay, I do have every week I'll provide the weekly update like for the SV members area now. So this week I also provided the update and such, okay. So if you're looking to test out, okay, all right, seasonal advantage insiders, it is only $4.99 until 7th of September, okay, at 70% off on top of the usual price $596, okay, $4.99 per year. And by the way, I have the intention to increase the price next year. So this year, I guarantee you I will still hold until for $4.99 lah, okay. But next year I can't promise, okay. So next year I might increase the price already, okay. I think I'm still undercharging. So initially when I first started seasonal advantage insiders, I can ask Henry and the rest. I only provide the data. There's nothing else. I still charge about the same price. So after that, I add in more things and more things and more things. I'm still holding on to the same price. Okay. So next year I will definitely increase price, but how much I don't know. Okay. But you know, right now it is also backed by a 30 days money back guarantee. Okay. So 499, what can you do with 499 per year? I think per trade, sometimes you already lose or win more than 499 already. Okay. So just one profitable trade can cover the annual membership fee. All right. Any questions so far? Any questions so far? Right now, we have close to about 300 members right now. Okay. Yeah. So by the way, if you are SB members, I think there's still a quarter or half a portion of you guys never joined the Telegram channel. Okay. Right. If you are there, okay, please join the Telegram group. This is not the full strength. This is not the full strength. All right. Any questions so far? No question. Okay. If there is no question, thank you so much for tuning in. Let's see what is the market doing right now. The market is back to negative again. So the market is quite difficult to trade for the equities, at least for the equities. So this is where I can look for other asset classes to trade. Okay. With that, I think thank you so much. And if you're keen to join, do join my seasonal advantage insiders. I will post again, once again over here. Okay. If you find value in today's session, please type value in the comments before I go. Okay, I really appreciate your engagement and your comments. Give me a like, share, and comments as well. If you want to give me angry face, that is fine as well. I think there's a one angry face. I don't know. I see angry face here. Give me one angry face. I think that is fine as well. Give me an angry face is better than give me no face. So give me a like, share, and comments. With that, thank you so much, and see you guys again, hopefully next week. All right. See you and have a good night ahead. Thank you and bye-bye.